Hey, what's going on, guys? Welcome back to another live session today. Wow, today is pretty red. Come on, guys. Man, it's really freaking red today. Ah. How you guys, man? How you guys doing? It's been a while since the last, gone through live. I hope you guys can hear it, and if it is too loud, let me know if it is too loud, and if not, today has been pretty red across the board, and I'm not sure what exactly happened. Today is Monday. It's bloody Monday. All right, so how are you guys doing, man? I think I owe you guys a live session simply because it's been I think 1 week of hiatus, should I call it a stop. Yeah, so I think been pretty busy with a couple of schoolwork, so yeah, but nevertheless I'm here, and let's enjoy the night together. Right, yo, Nicholas Ter, welcome. Wow, everything is red. Yeah, man, everything is just red across the board. I'm not sure what exactly happened. I don't know. Just let's see what's the general market stuff, right? So let's take a look here now. Let's take a look here. Okay, so right off the bat, I think we rely on Google, Yahoo stock news, right? So the stock market news: stock market falls on Chinese property fear. Oh yes, there was this Evergrande spur abroad. I think I read it somewhere. I'm not exactly sure. Maybe you guys tell me. I heard it's like Lehman Brothers. I think it is a pretty crazier case as Lehman Brothers. So I think a lot of fear, uncertainty, and doubt all around, flying around. So I don't know, man. You let me know. You let me know how's it going. Yeah. So let's take a look at this. Stock market falls on Chinese property fear. So let's take a look at this. It's been a while since last touch on the talk about the stock market going to live. I've been I think we have our old friend here, John. How are you? Man, I've been busy with some of the stuff on my end, so haven't been going live, haven't been using a lot of YouTube, so do pardon me. But how are you, man? I'm glad that you're still going strong with this YouTube journey. Yeah, so let's go through this together. Stock market falls on Chinese property fear. Okay, so if it is too loud, do let me know. The background music. So okay. Oh man, we need to subscribe. Come on, man. I'm not gonna subscribe to this yet. At least we know that's the one of the reason. It's just crazy red across the board. Wow, Apple dropped 2%, 3%. Google is down 2%. Wow. Clover is down 5%. GameStop, AMC, everything is just flying down. All right. Nasdaq down 2%. I think there are a lot of fear going around. So first and foremost, let's take a look at our our baby, Clover. See how is it going. Glad to see you back. Yeah, man. I thank you for joining, John. I really miss doing live and speaking with all of you guys. I think I'm glad that I have some time right now. I think this week and the coming week, I think I'll be a little bit more free to do live and perhaps slot in 1, 2, or even 3 videos for you guys. And of course, I think I need to catch up on your life, John. think I missed out quite a fair bit. Yeah, so I think it's good to be back. It's good to be freer to come back and mingle and join you guys. Yep. Okay, now let's see what okay, let's hope that oh man, gonna bring me to somewhere else. So Evergrande isn't the only reason the stock market is headed for its worst day in 2 months. Here are 5 other reasons. Okay, I think we need to take a look at this together. Okay, so the first one is, let me read to you guys again. Evergrande isn't the only reason the stock market is headed for its worst day in 2 months. Here are 5 other reasons. So the US stock benchmark were on track to post the worst daily drop in more than 2 months, with the skid being blamed on the potential collapse of Evergrande. The Chinese property giant is threatening to default them on 300 billion in debt that could ripple through global market. I'm not sure is it renminbi 300 billion, but if it is USD 300 billion, I think safe to say it's a lot. I'm not sure how many zeros are there. I think 9 0 plus another 2 more zeros, that would be 11 zeros. Safe to say it's a lot of money. Okay, 1 billion alone is a lot. 300 billions is just crazy. Now the Dow Jones Industrial average DJ negative 1.46%. S&P, Nasdaq, all this has dropped quite significantly, as we have witnessed just now. Click to read. Oh, and read notification. Okay, I think my Wi-Fi is slightly slow, but nevertheless, if you guys can see, can hear, I don't know whether you guys can smell, but yeah, I think as long as that's all is good. Yeah, hi Richard, welcome back, Mr. Richard Lam. I think it's a little bit hang, but I'm not sure whether you guys can hear me. I think you guys can. The Wi-Fi is slightly slow, but it's okay. So okay, the first one is Delta woos. The Delta variant of COVID-19 resulting in higher cases in the world's largest economy. Right, the US is now averaging more than 200 deaths daily. That's a lot of people, man. According to New York Times tracker, the most since March 1st, and consists of almost entirely of unvaccinated people. Florida, which has vaccinated 56% of its population, is averaging 353 deaths a day. Texas, where 50% of the population is inoculated, is seeing 286 deaths a day. So I think that is a lot of people affected by this Delta variants. Yeah, I think to me, I always feel that one is too many. Hopefully hopefully this entire thing goes away. So yeah, so this is the Delta rules. I mean, over here in Singapore, there are on the rise of cases. I mean, we hit 1,000 just a couple of days back, and I think 1,000 plus yesterday. So I hope you guys stay safe. Be safe. Yeah, take good care of yourself, man. So Federal Taper talk. Markets are fixated on the rate setting Federal Open Market Committee September 2021-2022 meeting. Okay, so where federal officials facing the prospect of removing accommodation that have proposed markets up since the start of COVID-19 pandemic in US, even as the economic rebound looks uneven. Wow. Now, the Federal has been buying 800 billion of treasury and 400 billion of mortgage-backed securities each month since last June to keep long-term interest rates low. I think if you guys are into, you know, all this interest rate and stuff like that, you know that that they need to do this to lower down the long-term interest rate, you know, to booster the demand, right? Because ideally it should be I mean, it should be on a delicate balance. Okay, now it said it would maintain the purchases until the economy hit a threshold of substantial progress on inflation and labor market, and question the market's weighing is whether the time for tapering those asset purchases is now. A number of federal officials have expressed a desire to announce tapering at its September meeting and begins the initiative before year end and eye toward concluding 2022. Now, debt ceiling. On Sunday, U.S. Treasury, oh yeah, I read this. Treasury Secretary Janet Yellen urged Congress to raise or suspend the nation's debt ceiling or risk widespread economic catastrophe. And in an op-ed column published by Wall Street Journal, Yellen noted that U.S. has never defaulted and said it must not now. The Congress has raised and suspended the debt limit about 80 times since 1960, Yellen said. During the Trump administration, Democrats agreed 3 times to suspend the debt ceiling. The country's accumulated debt is about 28.4 trillion. Wow. Okay, so September season, there's a growing sense of valuations are rich and Federal Reserve easy money punch bowl will soon be yanked away by the worst possible time. Seasonally, September has been one of the worst months for stocks, and investor think that market might trade through to trend. So I think, I mean, for those of you who are new, what it says is usually, typically September is one of the worst months in the entire, one of the worst months lah. So I think it is being true to being one of the worst months. A correction is due. Strategists think that the market is due to significant pullback of S&P has marked more than 200 seasons without drawdown, 5% more than recent peak, making the current stretch elevation longest since 2016, when the market went 4 seasons without falling at least 5% peak. So it is one of the, you know, worst, and it's not just the Evergrande situation in China. So yeah, so these are the 5 other reasons which I think the Evergrande property in China is pretty bad in itself. So a couple of all this, I think safe to say, you know, it is expected. Okay, so yeah, I mean, that's a lot of people, man. Yeah, 5%. Joshua, what's up, Joshua? Welcome back. Richard Lam, can share C. You know, when I was reading the post, right, and then I saw the comment by Richard Lam. I saw, I mean, Mr. Richard Lam, he said can share T and C, right? I read it as can share T, so I was like, whoa, I need to think of something funny to share with you guys. I have a lot of funny situation, but yeah. Okay, hello, yeah, Clover. Okay, agree with the 5% correction. I do agree, man. The market has been going up and up and up and up since I mean 2020. I mean, granted that, you know, I think March, May was pretty bad time. I mean, it dropped and dropped, but then it went back up on, you know, June, July, and then I think right now it is bound due to a 5% correction. Okay, so let's hope that it is a normal correction instead of a crash. I'm not sure whether it is going to be a crash. You guys let me know. Hopefully not. Hopefully we are good, right? Okay, now let's take a look at our, you know, market. Instead of just seeing this, let's take a look at our market. And right now, you know, Clover, C, right? I mean, Richard asked for C. I think I need to add it into my list. Wait, let me push it here. C Limited. Okay. Why is it not showing? SEA, right? SEA. Where is my SEA? Sometimes I can't see, you know. Isn't it? SE stock. Okay, come on. So I mean, how should I add this in? I forgot. Yeah, follow. Okay, so it is in my watch list, and today C has gone down substantially. I mean 3% for all this big cap stock is it's quite big lah. But if you look at it in a very big picture, I think it is bouncing off the what is this? A 50-day moving average and the 200-day moving average. So I'm not sure. Based on this upward trend, I think it's safe to say that we are still safe, right? Yeah, I mean, given the correction, I think, yeah, I think, yeah, I think John, you made a very awesome point. I think more like 10% have money on the sideline waiting. So this is the time where we put our money into the market. All right, I mean, wait for it to drop, and when you're comfortable, you can put in the your funds into the market, because when you do, I think it will be great. All right, because then you buy the dip, I suppose, and I hope that it is considered as buy the dip. Okay, so I think everything just tank. So let me. Yep. So it's a pretty bad situation. If you bought some calls recently, I think you know, in Chinese, in Hokkien, or I don't know what is it lah, but in Singapore we call it very sian. You know, it's like you expect it to go up, but you know, for the past couple of days, or even I think starting from today, it's gonna be red, and it's gonna be very yeah, I mean, nobody like seeing red. Okay, depends. Okay, if you are very long on, say for example C, as what we were looking at just now, then you look at this chart. I think when red days like this, I think I wait for it to drop to 50-day moving average. Or if you think that, you know, with September season and with the 5 reasons that we talk about, and with the Evergrande issue in China, then I think it is, you can sell a put option over here, right? You can sell a put option at around you know, 280, and then from there, I think it's safe to say that it'll be decent, right? I mean, yeah, so that's what I feel lah. Yeah, so you can sell a put option to get some pocket money. If you want to buy C Limited, I think you should sell a put option, and then or you already have 100 shares of C options, then you can, you know, put a sell option, sell a call at, you know, around 360, because I don't know, I mean, depends on how much you want to gain from this pocket money, right? Okay, I realize that I mean, it's always been a trend when it's go up, and then when the market is, it sounds very complicated, but I think generally it's just up and down, up and down. I mean, yeah. So as what the Wolf of Wall Street, I forgot what's his name. I think one of the scene, I'm pretty sure you guys remember, like he mentioned that, you know, the stock market is just like a fugazi, you know, where, you know, it's going left and right. Nobody knows what's gonna happen next. I think with technical analysis, fundamental analysis, if you look at some of the trend, and you know, then you could, I guess, predict with maybe 2% accuracy because frankly speaking, you know, even right now, if you buy today and tomorrow if fly, you know, like 10% everywhere, then chances are it's a bit luck into it. But of course, you gotta take the leap of faith. Yeah, lor. So I think now, I think yeah, I think today is I think apart from the Evergrande and the 5 reasons, I don't see any other reasons as to why today is red, like red like what it is today. So yeah. Okay, let's open up the chart and see, you know, if we even on the red day whether we can, you know, trade. I mean, even on the red day you can trade it, you can do whatever you want to do with it, but I think even on a red day you can still trade it, right? I mean, no harm trading on the red day. So that's the beauty of trading. Investing is you buy and hold for the longest time you can, but on the red day like this, you just trade lor, or you sell a put, or you short a company, depends on what you want to do. Yeah, so if you want to trade, then you can take a look at interval first. And I mean, I if I want to trade, I'll do a 30-minute chart, then followed by 15, 10, 5, 1. Then from there I decide what kind of time frame that I'm more comfortable to do. Yeah, so Tesla drop 4%, man. I mean, it's good, man, because like my mom just sold Tesla recently, so yeah, I think we wait for it to bounce back to this area, and then we decide if it exit, then okay, if then I'll whatever, right? But if it bounce back up, then I think we should collect some of it. I think that's my take lah. It depends on you, right? It depends. Wow, if 30 minutes to 1 minute won't go wrong already. Yeah, man, I mean, it will still go wrong definitely, but you will not, I would say, yeah, you have a clearer picture of what's gonna happen today in general. Okay, so anyway, if you guys are not okay with the music, I can make some changes, you know. I just like this music, and then I just play lah. Okay, Dinesh DM, what's up, Dinesh? Welcome back to the live. I mean, since the last time you came to the channel, I think that's when I start to get a little bit busier. But nevertheless, I'm here, and we have the entire night to play around. So I think I should do that. Yeah, I mean, I think you should do that. If you want to, you can look. I mean, ideally, if you want to trade, not just 30 minutes, you should look at, you know, weekly. I mean, you should. It is your money, so you should trade responsibly. So therefore, you should look at the general trend at large. So weekly chart, daily chart, and then even some people even monthly chart, right, to know the general trend. If it is upward trend, then it's okay, you don't trade against the downward trend. So if it is like C, you know, generally it goes up, you know, let me show you guys. If it generally, you know, goes up like this, then I would say that okay, red days are pretty good to buy because you're buying at a discount. So that's one, so you know the general trend, and then you look at the 4-hour chart, whatever 3 hour, 2 hour, 1 hour, then you know roughly what is a current short-term trend, and from there then you look at the hourly, 30 minutes, 15 minute, 5 minute, 2 minute. Yeah, depends on what you want. And of course you can, so for Clover it is minute chart. So as you can see, today is just like every other stock. It's gone up and down, but yeah, so you see the general trend, at least at this point of time, is a downward trend, correct? And and the other time, when CLOV flew 20 something percent, and then we drew this particular line together, that was the previous time when it went 22%. It was quite insane. So yeah, we drew this downward trend, and the next day it dropped, and then I think 12%, and then from there on it continued to drop. So yeah, so I think therefore you need to really look at the long term, not just like 1 minute and then you decided to enter again. Been hanging around. Sup, Frank? Been hanging around in the background. Glad to see you again, Gary. I look at my highest conviction today and add it to my long position. I think Frank and I, we do agree in a lot of things, and I think a lot of us over here, John including John, I think Richard as well, we all agree that red days are days where you put in your funds. Okay, a lot of people make mistakes, rookie mistakes, like what I make even up to now. Like sometimes red days I feel that the market is bad, or I don't want to buy the stock or whatever, right? For whatever reasons, I just don't buy. But typically, if you want to buy on red day, you should, if you want to buy any stock, you buy on the red day. You don't buy on a like green day, 20-30% kind of thing. So yeah, I think Frank, I do agree with you. If you have the funds available, then do consider buying into all these stocks. For me, I think I will just stay on the sideline and see what's gonna happen in the next couple of days with the Evergrande situation, and I'm not very comfortable with the whole Delta variant situation, so I'll just stay out and observe for the time being. Of course, all these massive red days are a very good position to buy, but for example like Tesla, I'm waiting for it to drop to maybe $700, then I will put some of my fund back in and see. I think we have established that it has been really a bull run since very long ago, right? So it has been really going very strong, and I would like to at least drop to the 50-day moving average or a 200-day moving average, and then from there I will put in more funds. If not, I'll just stand at the sideline and just cheer everyone out, right? If it hits, okay, I'm sorry, but if it doesn't, then it's fine, okay? Because yeah, but as you can see over here, generally there's a trend if you look at it in a big picture. And of course, if you want to take a look at minute chart, and then you can add in the add in the VWAP, then you roughly know where is the stock going, or what's the direction. So you take a look at this. I'm not sure, maybe the minute chart is at play. Let's take a look at 5-minute chart so we can see properly. So it has, right off the bat we just dropped right? Since pre-market there's been a huge drop, and I think we're just going back to the VWAP. So if you guys want to get anything, I think you just wait for I think it's a bit too late to get in anything like this now. So yeah. So you guys have any stock that you guys have in mind? Perhaps we can go through them together. I think I'm quite excited to see. Riot, E-bond, all this, it's I mean, it's like what, down by 7 to 8% today. And I mean, I do have conviction on this stock. I mean, at least, I mean, a couple of months back when I bought this during the crypto craze, right? I mean, it was at $4, went all the way up to what? This is, I believe it's $14. And then I think a lot of people win a lot of money and a lot of people lose a lot of money. I think I made quite a fair bit, but I made a mistake because, as you can see over here, the previous very long time ago went up, dropped, and then it went up. So I suppose this was the base, right? I mean, who would have thought? And then when it dropped to around $3, $4, I start to pick up more. And as you can see, since then, mind you, this is the weekly chart. So since then, it has just dropped more than 50%. So when it went up the previous time in June, I released all my position because I'm not sure how long it's gonna drop, because this is a China company, and yeah, really hard to. So I think all this stock really gotta be careful, man. Yeah, I mean, take a look at this. I mean, Riot, Hut 8. I think all this, it looks really, yeah. I mean, Josiah, you burn a lot of money in Riot. I think Can, a lot of people burn in Can as well, because I mean, it is a China company, I believe. Right? It's not so bad, right? I mean, I'm not discounting your pain, but I think a lot of people burn in Can because I mean, it is a China stock. It dropped from $30 to I think $7 now. So oh boy. But anyway, so you see this Riot, right? I mean, you take a look at this, and yeah, I mean, take a look at DPLS. I mean, penny stock, right? So the pattern is pretty much the same. And I'm not sure whether you guys are into DPLS. I'm still holding it. I'm up by 800% for DPLS. It's quite insane. I honestly, I'm quite convinced about this stock at the beginning, right? DPLS, Dark Pulse Inc. It is a penny stock. It is very risky. I bought it at I think 30 cents. No, 3 cents. It dropped all the way to sub penny. I was like, whoa, what? So yeah, thankfully it went up, and I think I'll just diamond handing it, right? I think all this penny, you buy and then you just forget about it, and then like maybe hopefully 10 years, 20 years, 30 years, you thank yourself for it. I mean, just similar to Bitcoin. You just put it. I mean, a lot of people say if you put 1K into Bitcoin, 10, I don't know, 2017, then you make how much? I think that is the case. I think a lot of gambling is going on. I mean, I wouldn't lie. I just put in and just, you know what, I'm gonna forget about it. And yeah, I mean, making pretty decent gains here. So yeah, hopefully it continues, man. Okay, let me see if we have anything to go through apart from, you know, the 5 situation that we are facing. I think today is a pretty good day to buy if you are considering of buying anything. Yep. Anyway, I'm not sure whether you guys are football fan, but I am. I play football since I was young, and it's really crazy for the past couple of days, and especially yesterday with Manchester United versus West Ham. I think, wow, Okay, so what do you guys think about the Evergrande situation? Let's take a look at this. I'm gonna show you guys in a little bit. Oh, we have a new subscriber. Welcome to the channel. Right, welcome to the channel. Knoa, what's up, man? What's up? What's going on? Thanks for joining us, joining the channel. This channel primarily we're gonna do some live. We're gonna talk, chat. We have a good chat. Primarily, I'm gonna talk about finance, the stock that I like, and just gonna share my personal opinion about it, and just share with each other. If you guys have anything, just let me know. Okay, so oh yeah, Dinesh, I hope I pronounced it correctly. I should be correct. I have a couple of friends called Dinesh. DPOS, if you guys are in DPOS, let me know. I did a due diligence on DPOS back when it was sub penny, so now it's 10 cents. It's like a baby to me, and at 800%, no cap. All right, no cap. I'm not lying to you. I mean, it's penny stock, so it's nothing shocking about it. For those, I mean, I think beginning of the year it was, I think 0.0001. I think those people who bought back then are making pretty much 10,000 or whatever gains from DPOS. So it's really insane. Okay, it's really freaking insane. Frank just said, seems like a lot of news out of China has been affecting the stock market in the past 6 months. This Evergrande stuff just seems like the latest thing. Yeah, man, this Evergrande stuff is quite mind-blowing. Okay, as what I was discussing with some of the people who came earlier, right? I mean, this Evergrande stuff I'm gonna read through what is it. Okay, as I have prepared, I'm ready to read through with everybody, and then we discuss on what we all think about it. And we also talk about, apart from this Evergrande stuff, we also have 5 reasons why the stock is going cuckoo. So yeah, that's so we're gonna go through this. Anyway, Jerome Mackenzie, what's up, man? Welcome back to the channel. It's been a while since I do a live session, so it's good to talk to you guys. I hope you guys are doing well. Drink more water and put some sunblock. I mean, just a bit random, just holding a sunblock. Yeah, so yeah, SPF 500 plus, S&P 500, whatever. So yeah, it's not sponsored, by the way. I'm just holding it here. Okay, so let's go through this together. And yeah, Evergrande fears sends stock market tumbling. Here's what investors need to know about the China property giant. Okay, so yeah, hold on. Let me see if the music is still around. Okay, if the music is still around, is it too soft? Is it too loud? Let me know so that I can adjust it. If not, I think everything is good. CNBC, maybe Evergrande situation, right? Situation. Okay. Hold up. I think I accidentally pressed a lot of stuff. Okay, hold up. I think I open up quite a number of stuff, so please. Yeah, I think it's kind of hanging. Okay, Jerome Mackenzie. Okay, I think I'll play that later, but let's go through this. I'm gonna read this again if you guys missed it. Welcome to the channel. Evergrande fears sends stock market tumbling. Here's what investors need to know about the China property giant. It is just fresh, 8 p.m. I mean, 6-minute read, just a couple minutes. Oh my gosh. Okay, I think at least it's not so bad. There's no music. There's no music. Okay, thank you guys. I mean, then they must have been pretty awkward. Yeah, bro. What's up, Duke Leroy? Evergrande go boom. Yeah, I think this whole Evergrande situation is getting out of hand. In case for those of you who don't know, Evergrande situation is really getting out of hand. I mean, I don't know whether, I haven't fact checked, right? But I read it somewhere say that, oh, Evergrande situation is worse than Lehman Brothers situation. I mean, in terms of money wise, right? In terms of money wise, it is worse. But of course, I mean, that was 2008 and now it's 2021. So it's like inflation and stuff like that. So definitely the size of it is definitely bigger. But whether it is bad or what, just let me know. Okay, go boom. Okay, let's freaking go. Correction: an earlier version of this article incorrectly described the timing of potential default. The article has been corrected. Okay, that's good. So it's good to be slightly late. Okay, so now let's go through this together. Okay, China wouldn't bail them out because they don't want to look weak like the Yanks. What do you mean by the Yanks, hey? Yeah, I don't know, man. This whole situation just crazy. John said, the truth is people have been talking about this property giant problems for at least 2 years. I think I read it. I mean, because in Singapore we are pretty much in touch of China news and stuff like that. So I mean, especially my dad, right? He's very into, you know, news. So every day he tell me about China housing situation, and I didn't really bother about it. But I think this whole situation is getting a little bit out of hand. So yeah, okay, let's go through. Right, Evergrande is a Chinese property giant. For those of you who don't know, nursing more than 300 billion in debt, remains on the brink of default. For those of you who don't know, default means they are not going to pay. In short, right, in layman term, not going to pay. So they just ignore their responsibility. So 300 billion, safe to say 300 billion is a lot of money, sending global equities tumbling Monday as investors who had previously ignored the situation began to pay heed. I mean, they are literally talking about us. We previously ignored this whole situation, as what John highlighted over here. I mean, myself included. I'm not sure about you guys, but I heard of it, but I don't really care. Now, fears of bursting property bubble have long been concern for investors when it comes to China. A heavily leveraged real estate sector makes up more than 28% of China's economy, according to Financial Times. 28%. China is not a small country. China is a pretty big country, and 28% is really insane. So, fearing of bursting the property bubble. And the previous time when we burst the property bubble, a lot of red days since then. So, let's finger crossed it is just a normal correction, and finger crossed somebody's going to bail them out. Okay, but Duke Leroy said China wouldn't bail them out because they don't want to look like, yeah. So Evergrande dire situation is sparking debate how Chinese authorities should respond. Meanwhile, holders of Evergrande's approximately $19 billion in dollars denominated bonds are left to wonder what will become of their investment. I mean, if they ever go bust, the $19 billion in dollar denominated bonds just gonna go poof, unless somebody's gonna bail them out, and unless there's gonna bail out. This whole situation is gonna be tricky because I mean, I'm not sure about how US is gonna be affected. Yeah, Duke Leroy, I know. Okay, I know. Yeah. Yeah, I mean, yeah, Americans, I mean, they bail out the Lehman Brothers and many other companies in 2008, and as a result, I'm not gonna down to it, but yeah, you can watch the margin call. What else? What are good, you know, investment movie? I think margin call is pretty lit. All right, margin call and okay, a couple of them. I love it. The Chinese government has the opportunity to buy in at the discount. Yeah, maybe they are doing that, and then we just buying at the discount. I think Frank very in tune with China stock like Alibaba and stuff like that. So I think Frank would possibly provide a pretty good insight of yeah. So and Frank just said earlier on. Frank just said earlier on that he's buying the dip. Oh yes, they did not bail out Lehman Brothers. Sorry, John, you're right. They didn't bail out, but they did bail out a couple of companies with huge situation. The Big Short is classic. Yeah, The Big Short. Yes, The Big Short and margin calls. I think those are pretty very nice to watch. I love it. I in fact, you know, I binge watch the scene. Okay, sorry, I'm getting, you know, distracted. Okay, now we're back. Evergrande's dire situation sparking debate how Chinese authorities should respond. Meanwhile, holders of Evergrande's approximately $19 billion denominated bonds are left to wonder what will become of their investment. What's happening? So Evergrande faces 83.5 million interest payment September 23rd on its March 2022 bonds, and at a $42.5 million payment on September 29 on its March 2024 notes. Oh, okay, so March 2022. Okay, there's a typo. Come on, man. I'm gonna read it again, all right? Evergrande faces 3.5 million interest payment September 23rd on its March 2022 bonds, and a 42.5 million payment on September 29 on its March 2024 notes, according to news report. Failure to settle those payments within 30 days of their due date would put Evergrande in default. It's quite crazy. Fitch Rating, a credit rating firm, on September 27 downgraded Evergrande's rating to CC from CCC+, indicating they saw some sort of default as probable. Evergrande is one of China's top 3 property developers. Although the residential housing market is highly fragmented, Fitch analysis noted in a September 14 report. So what's the reaction? Worries around Evergrande were blamed Monday for wobbles across global equity market. Markets in mainland were closed Monday, but Hong Kong's Hang Seng Index HSI dropped by 3.3% and fell more than 3%. I think there's some sentencing structure, I think. European equities also tumbled, while US, the Dow Jones all dropped by quite substantial. I'm not sure how is it going now. We're going to look at later, but it's red. Treasury yield fell, with the rate on 10-year Treasury note 1.33% down, more than 5 basis points as investors appeared to snap up safe haven assets. Yield fall as debt prices rise. The dollar rose against major rivals. There is a turnaround from last week when analysts taken note of lack of broadened reaction by investors to Evergrande's woes. I think I saw this somewhere, didn't really bother, but boy, today is just red. What is the risk? Evergrande's market share in 2020 was only around 4%. Fitch said the risk of significant pressure on house prices in the event of default would be low, unless the restructuring or liquidation of its asset becomes disorderly. Fitch believes this is something the authorities want to avoid, the analyst wrote, right? But faith in the scenario may have been shaken after Reuters reported last week the editors of the state-backed Global Times newspaper had warned that Evergrande shouldn't assume it is too big to fail. I think we need to highlight this. Shouldn't assume that it is too big to fail and think this is the whole situation back then in 2008, where everybody thought that, you know, it is too big to fail, companies are too big to fail, you know, they're gonna be bailed out and stuff like that. Then this whole situation happened. S&P Global Rating on Monday said default by Evergrande would cause more than mere ripples in the financial market and would unlikely lead to a tidal wave of defaults. So I think just mere ripples, like today, rate day. So events could broadly rattle investors' confidence in China's property sector, and for speculative grade market broadly diminishing funding access for unrelated names, said S&P Global Rating credit analyst Matthew Chow. Right. Analysts in USB this said on Thursday note that potential for market spillover will depend on whether Evergrande restructures or fully liquidates. There's that. Okay, so I think the whole thing over here, the risk in the event of restructuring, we expect bonds to bounce off their lows and contagion to be broadly limited. But in the event of liquidation, there would likely be a high degree of contagion. Oh, damn. The spillover would occur, they said, 3 channels. So investors getting extremely low recovery value, something would lead to material loss of investors' confidence in the broader property sector and Asia high yield offshore market, and create spillover in the broader Chinese financial assets. A domino effect of credit events, given both banks and non-banks with large exposure to Evergrande could potentially go under and force into restructuring. It is good to note. I read it up. Vanguard and many different big financial institutions have a stake in Evergrande, so hopefully nothing happened, right? This would again create spillover other Chinese financial assets. Okay, a full liquidation would involve keep well agreement, written guarantee as parent company, and that will maintain the solvency of subsidiary. The added selling pressure. Okay, so I think it is quite a comprehensive. I wouldn't say comprehensive. Okay, but I'll say. Okay, why the delayed reaction? Some analysts. Okay, so yeah, there was a delayed reaction because I'm not sure about you. I saw it somewhere and I didn't bat an eye on it. So I think definitely a delayed reaction. Okay, so they got crushed and then bailouts came after. Yeah, I think John would have a clearer picture on this because you're in US itself, so yeah, so I hope I don't think that this whole situation would have a big impact. I'm not sure. You let me know. Yeah, you let me know what you think about it. But one of the best ways to think about China is that it's a country, but it operates like one large company. While there are private banks and corporations, in the end, the Communist Party effectively owns everything, anything and everything, if it wants to, he wrote. And because of that, there isn't really global contagion risk with Evergrande, because in the end, and as far as we know, the loans of Evergrande were made by Chinese banks that are implicitly backstopped by the Chinese government, and the Chinese government's balance sheet can easily handle Evergrande's losses, which are valued around 303 billions in liability, he said. Also, investors had taken Evergrande's situation in stride because Chinese financial strains have been seen for some time as a slow motion train wreck. Not something that has suddenly appeared. So yeah, we all know that this whole Chinese market situation, financial collapse, including long-term capital management, Baring and Lehman Brothers, came out of the left field, he said, and produced domestic and international shockwave, he noted. But China's different financial support structure and elongated nature of difficulties might have desensitized global markets to the strains that have seemed to be coming to a head right now. In the case of Evergrande, that said, investors have previously been caught on the hoop by Chinese authorities. Noted it wasn't until 3 weeks after took over Baoshan Bank in 2019 credit condition, but in 2015 broader ripples sent through the market. August 40% Chinese stock. So I think maybe okay. Dinesh say he's scared. It's scary. Yeah, no doubt. I mean, that's the reason why I decided to stand on the sideline first before I buy the dip. I mean, today it is a really awesome dip to buy if you guys are looking to buy, looking to getting the dip. Yes. Yeah, but yeah, I mean, but then I think I mean, do correct me. I think Frank is in on the fence, on the side where he would like to buy the dip right now. I think, yeah. I mean, he's quite bullish on, yeah. It can affect the Chinese banking system, but yeah, if government covers, then who knows. The next question is how many jobs would be lost. I think John put up a very sensible, very important question. Okay, I mean, yeah, sure. I mean, the government, the Chinese government can bail them out, can do whatever they want to do. But the question is, what will happen to the people? Okay, how many jobs will be lost? And this whole entire situation is a mess. And I think it's not the question of whether how many people will lose their jobs, but rather it's not the matter of whether people will lose their job, but more of like how many people. So let's hope that things are kept to the minimum, right? Yeah, so take a look at this. It's just rate throughout across the board. I mean, NIO is down by 5%. Wow, I mean, it's very rare to see NIO be down by 5%, because I'm not sure about you, but I've been looking into NIO quite some time, and it's just like been around like 1-2% the max, and then 5% is quite crazy. Yeah, so I don't know, man. I think they need to quickly fix this entire shenanigan. Definitely don't like to see this whole situation. I mean, I don't like to see red days, but it's more so there's a compelling reason, quite scary reason, I must say. Yeah, but then again, I mean, we take this piece of article with a pinch of salt, because I mean, of course, it has its own agenda, and of course it may not necessarily be 100% correct. So yeah, and as what we mentioned, there are 5 other reasons. Delta variant is definitely one of them. So yeah, so there are different reasons. Let me know what you guys think about it. I personally want to stand aside. So yeah, if you guys are bullish, let me know. Maybe we can discuss, because myself on the fence on things looking as of right now. Alright, I think looks pretty fair. I think Josiah just said I just bought the dip, haha. I think yeah, I mean, sure, a lot of people bought the dip, and yeah, I think I wanna I mean, if I don't buy today, means I'm gonna wait for a further dip, but I hope that it's gonna go up for you and many others who bought the dip today. Let's watch some news article with regards to this whole entire shenanigan, see what is the general feeling about it. and yeah, we can move forward from there, I think. Yep. Okay, you guys meanwhile take a look at MOOMOO and some of the stocks first, while I source for the video that I want to share with you guys, because I think by the look of it, this Evergrande situation is quite interesting, right? I mean, it's quite scary as well, but looking good, sir. Karabang, welcome back. Yeah, so we just, I mean, I think you might have missed out a little bit on the Evergrande situation, the China property situation that's causing a huge dip in the financial market, and hopefully it is contained. I mean, it would not be able to contain, but my point is hopefully it will contain to be at minimum lah. Okay, I think hopefully it's just within China, or maybe a little bit, here and there, but not prolonged. John just said not enough dip for me in stocks. I think yeah, I mean, for me, I do feel that it's not enough a dip as of yet. I think this whole Evergrande situation would I feel that it is a can of worm that could cause other financial institutions, or yeah, I feel that there are more to come. Hopefully it ends here, but yeah, don't know. Okay, let's yeah, so let's watch Mr. Kreml. He said the market sell-off will last a few weeks. Man, hold up, let me pause the music. And hold up, not so fast. Man, when he say, the market sell-off gonna last a few weeks, I think we safe to buy, huh? I don't know. There's this meme, whenever he tell you to sell, that's when you buy. When he asks you to buy, that's when you sell. Yeah, Frank just said, yeah, I tend to be more optimistic by nature. US could be affected if the US bank is overexposed, or if default causes lending constraints that ripples outside of Chinese market. Yeah, I mean, at this moment, I think I'm not buying the dip, because I think I need to research a little bit more after these live sessions. The boring stuff, I mean, just now I was reading one of the article. I felt that it could be a little bit boring for you guys, so I skip a little bit. But yeah, I think we need to know more. I mean, Frank, you have a YouTube channel yourself. I think at this point, yeah, I'm going to read more about it and understand exactly the ins and outs, and maybe ask my friends who are working in banks what they think about it. And yeah, we see what is the common consensus across the board. So I'm going to see in the next couple of days how the market react to this, because clearly today has been pretty red. All right, just take a look at this. This is red. So the direction is not exactly good, unless today, after the market, after lunch break, then everything is good. So now let's take a look at this. Jim Cramer, he said market sales off last for a week. So let's before we talk about the video, before we watch the video together, let's read the comment section, because I love the comment section on CNBC, because some people like it, some people don't like it. Yeah, so here they go, trying to soften the blow. It will only last few weeks. Okay, Lord, we'll see about that. So clearly this person is not in favor of this entire thing. We have goals building in New York City. I live in building. That was 1/3 finished. Real estate market is very suspect. It's very sus. They are using baby in order flow. Yeah, come on. No. Okay, now let's watch it together. Can you guys hear? I think it's rather soft. All right, it's rather soft. Think. Hold on. Let me mute the mic first.
Yeah, look, I was saying that the sell-off's going to begin last week. It's going to continue for a couple weeks. And I was kind of using a Tolstoyan analysis, which is that all bull markets are happy, but each bear market is unhappy in its own way. I mean, this one we suddenly decided that this project, this problem, this $300 billion debt is an issue. It has been an issue for months. But we always felt that the PRC, the government, would bail them out. And David, what this seems to be is a recognition that when the nation's richest man, which is the person who owned Evergrande, is in trouble, we no longer expect the Chinese Communist government. Yeah, look, I was saying that the sell-off's going to begin last week. It's going to continue for a couple weeks. And I was kind of using a Tolstoyan analysis, which is that all bull markets are happy, but each bear market is unhappy in its own way. I mean, this one we suddenly decided that this project, this problem, this $300 billion debt is an issue. It has been an issue for months. But we always felt that the PRC, the government, would bail them out. And David, what this seems to be is a recognition that when the nation's richest man, which is the person who owned Evergrande, is in trouble, we no longer expect the Chinese Communist government to bail them out.
Yeah, I mean, it's part of what has been happening there in the last, I don't know what you call it, 6 months to a year, over a year now,
yes,
actually.
That's why it's a slow-motion train wreck, but it's been going.
Because it's not as though we haven't talked about an overheated property market in China for many
Right.
years. And I mean, there have been so many times that we have perhaps said, oh, this default, or could be the key one, or this could really undermine the entire financial system. I mean, it's not hyperbole. You've heard that many times for the years, and of course it doesn't happen. The Chinese figure out a way. Somehow the banks continue on, and those who saw financial Armageddon have been wrong. But here we are again with an enormous property company that has enormous amounts of debts, that basically is trying to actually make good on debts by giving people and/or vendors, empty apartments that aren't even finished.
Yeah, you're allowed to get
kind of where they are
parking
now.
spots. Carl, one thing I want to point out is we sit here and we talk about how the United States is not allowed into China. We're not allowed to make loans in China. We're not allowed to be part of China. Oh, but when China goes bad, suddenly we're involved with China? I am sorry. Look, we know we have to deal with 3 or 4 days of people who don't know what they're talking about coming on and talking about contagion. All I can tell you is we wish we had contagion. We're not allowed in. Our banks are the safest banks in the world because we have just been told by China forever, good luck, you're not coming in. So I can sit here and watch all our banks go down, Carl. But you know what? I am going to say this is the silver lining, the playbook silver lining, although the Eagles look terrible, of what I regard as being, it's the other side of, hey, you're not allowed in. They need us so badly, but we're not going to play because there's no reason to.
I hear you talking about the relative safety of U.S. versus China, Jim, but how do you fold in the Evergrande concerns with general stagflationary concerns, what this does to the Fed meeting this week, obviously the dance that we're witnessing between Manchin and the White House and the House?
Look, all that is negative, but so is the debt ceiling. I mean, we actually have, when you have people like Janet Yellen saying this could be catastrophic, you start thinking about the S&P being downgraded. That caused a 19% sell-off 10 years ago. I look at this moment as being faux perilous. I say faux because everything could be contained by oh, David's going to hate this, responsible politicians. If you think that they're responsible politicians, and we don't necessarily need a multi-trillion-dollar bill to hire people since we can't find anybody to work anyway, then you know what? We have to suffer through this period, David, where we can't get anybody to work. Hopefully that they don't create even more jobs that we can't find anybody to work, and then we deal with it. But we have to go through it first.
Jim, it feels like we've had more showdowns over the debt limit than even worries about the property market in China.
80 in the last couple decades.
But at the same time, if it actually were not to happen, it would be, do you not believe, a significant moment that would potentially be a very bad one for the financial market?
Yes, and that could cause a bottom. I hate to say what could cause a bottom, but since I've been negative for so long, I'm not looking for a rally. I'm staying negative, and then we'll see. There'll be cues. I mean, Carl, look, we come in this morning, and suddenly this thing that has been this looming crisis all over the globe, with the exception of the United States, because we're much more hostage to whether the Fed's going to raise rates. And suddenly people are like frantically just go, what is this Evergrande? What do they do? Oh, they own 1.5 million apartments. Oh, the apartments are empty. They've asked the employees to pay. I mean, this thing's been going on forever, but it hasn't been part of our lexicon because we're so busy talking about how the Chinese are saying to us, stay out of our markets. So look, I think that this isn't as negative as the idea of the debt ceiling. Once again, Senator Manchin this weekend, but now some other moderates are saying, you know what, maybe we shouldn't have a big infrastructure. And that that's causing some of our infrastructure stocks to trade down. But look, the narrative is negative. Maybe we have to be saved by earnings, but this is a moment, a 20-day period that started last Wednesday that is historically the worst period for 20 years. So we should not suddenly wake up and say, you know what? It is time to buy AMC Entertainment.
Okay, so I think safe to say that, you know, even the analysts themselves, you know, I mean, generally, September has been pretty red. So even Jim himself and many others say that this red day is going to last for quite some time. I mean, while listening to this and I do my research on another tab. You guys can't see it, but yeah, just fair to say that a lot of people are quite negative about it. But of course, I think we need to read more and understand what the hell is going on. But just take a look at this like to dislike ratio. Is quite. I mean, a lot of people don't really like Jim himself, Kreml. So yeah, debt payment deadline looms for China property. Investors buying the dip. Yeah, I mean, take their word with a pinch of salt. Okay, so mind you, over here, Evergrande crisis suggests China is making progress. Okay, China is making progress towards market-based pricing of risk. BlackRock. I mean, BlackRock. Yeah, Vanguard. BlackRock has a stake in this as well. So, hate to metals. So just generally, winter is coming. So I think it's 2 weeks ago, right? This Evergrande situation. 1 month ago. Wow. So I think we need to know more. I think it's quite deep. Okay. And some expert said that, you know, a major global market problem. It's not a major default potential, not a major. So it's mixed. But I'm bringing up default. So let's 30 seconds. Let's watch this together.
In global news, shares of China Evergrande Group tumbling again with the property giant on the brink of collapse. The company dealing with $300 billion in debt. Evergrande is so big that experts fear that its failure could ripple throughout China's economy and possibly markets outside that country even. But earlier today, the editor-in-chief of the state-backed newspaper Global Times warned Evergrande shouldn't bet on a government bailout, saying it is not too big to fail in this case. Wow.
Okay, hello, hi. Yeah, sorry. Okay, my bad. So you guys can't hear. Okay, you guys can hear now because I muted my mic so that you can watch the video better. But apparently I forget to off the mic, on the mic again, and that is on me. Okay, I think the music is slightly too loud. Got it. Thanks, man. This is like a whole this is like a, I don't know whether you guys watched the Congress, and sometimes they forgot to unmute themselves or mute themselves. I'm one of them. But yeah, I don't know enough to buy or sell. I was saying that this could be a huge problem, a huge can of worm, or it could be a simple problem. So we need to know more to understand whether to buy or sell now. It might be a bit too early to say I'm gonna buy now or what. On of course stocks that I feel that has potential not just a random stock, right? I mean, if it is random stock, then I think if it is random stock, then see how. Okay, then to answer Duke Leroy just now, when margin call gonna call for AMC Rocket? Oh boy, I don't know, man. I really don't. But then I was saying just now, and I was muted, unfortunately. But which is, if you recall, a couple of days back, right? In fact, last week, when we were doing live, maybe it were at $30 ish, right? Even less. So the fact that we are at 40, I think is fine, as long as we follow an upward trend. And of course, right now we have broken below the trend so it's quite at the short term. Of course, all these momentum stocks, you can't really draw lines, but I think at least for the short term it doesn't look very good unless tomorrow bounce back up 10%, which we have seen it many times from all these momentum stocks. But it really depends, man. I don't know, but I asked myself the question when it was $5, and now I think I don't know. I hope that tomorrow. Yeah. Hi, Jerron. What's up, Jerron? I think I believe this is the first time you're here. I think welcome to the channel. This channel is mainly about finance, mainly about stocks. And I'm gonna do live as and when I think I like it. But so what is a day job? Right now I am an undergrad in business school, and of course at the same time I do financial advisory, financial consultant, selling. So I have I'm a full-time university student, majoring in business and accounting. And of course, at the same time, I did part-time as a financial consultant. Yeah, so that I can't really touch some of the topic, or I can't really. Yeah, so I think I have to be careful of what I need to say. Yeah. Okay, Luke Leroy. By the way, doing this YouTube channel is. Oh, nice. Hey, nice. Same line, just grad last year, I think. Welcome to the same line. I don't know whether given your surname, I think. Yeah, but in Chinese, what 同行 I don't know. But it's like, it's good to see a fellow folk in the same industry. I think it's very tough industry, and but then it's quite fulfilling. And Okay, so but then again, so yeah, I mean, doing this YouTube video is primarily about my interest of talking in front of camera, doing videos, editing videos, and of course, you know, to challenge myself to speak up in front of camera. And of course, doing all these videos, definitely it takes a lot of time, but it's quite rewarding, at least for me. So I continue to do these videos, and if you guys have any feedback, anything to talk, to let me know. Just, I mean, I'm willing to learn and enjoy, you know, speaking with people across everywhere, you know, like John, we have Frank, we have you know, Dinesh, Josiah, Jerome, Mackenzie, and so many other people from different walks of life and different area of the globe. And these live sessions allow us to come together. So yeah, I think that's the reason why. Duke Leroy, AMC hitting 300 will definitely be the straw that will break the camel's back. GME will at 800 at that point. I do see very much possible. I think, I mean, personally, I think 300, that would put the market cap to be around plus minus times 10 of this. That would be 200 billion. So I wouldn't say it's not. I think it's very much possible but yeah. So unless, you know, there will be a short squeeze or wherever again, and it's gonna go up because you take a look at this. Oh man, weekly chart is like up, down, spike up to 76, drop down, and we are, you know, I think, I don't know, I think it's gonna be like this situation over here where we just hover, hug this area. I think it's the same case, hover around this area, and then boom, maybe 100. And then if this, you know, everybody, you know, diamond hands, yada 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 for the next, then don't know when it's gonna end, right? And if it doesn't end, the short sellers need to sell and stuff like that. So yeah, see how. Jerron, respect for putting in extra effort. Thank you so much. I think I really appreciate this. Yeah, I mean, it started off as a challenge. Yeah, I mean, just share since we are here. It started off as a challenge that, you know, I would want to achieve. Do video every single day, and yeah, for 30 days, and I'm glad I did it. And yeah, and then after, because I was pretty free, right, summer break, and although I had internship in one of the big 4 accounting firms, but it was mostly work from home. So I took the time, you know, extra time to film every single day, and it was quite fulfilling. Of course, now that come back for the semester, it's really tough doing videos even every single week. Yeah, so yeah, I think the frequency of video will be decreased, but I think at least, you know, these live sessions allow me to get in touch with people whom I enjoy my time doing live with. You know, Duke Leroy has been around since the very beginning, and I'd like to thank John, Duke Leroy, Frank, many of you guys, you know, Ichin and your, yeah. So the chart I sent on Twitter a while back, is it still valid? Bro, let me check it again. As you said, it's a while back, right? Let me check, and then let's see it together. If yeah, so my 4 guys were all from Big 4 accounting. What uni are you from? I am from Nanyang Technological University, but I'd rather say I'm from Nanyang Business School, because I think that is, I don't know, the top school in Singapore. Business school, I don't know, debatable, right? If you are from NUS, you say that, you know, NUS business better, SNU business, but yeah, I'm from Nanyang Business School, and I enjoy my time here right now. I'm in hall, by the way, if you are wondering, and you guys are not in Singapore, you know, hall life, you know, hostel or whatever you call it over there. Yeah, and enjoy myself, and that's one of the reasons why I'm busy, because yeah, but yeah, I mean, yeah, I think yeah, having said that, I think I having said that, I think I mean, okay, in case you don't know, there's always a banter between my friend. He's oh yeah, okay, so SUB, yeah, debatable. I mean, there's always a banter, right, between different schools. I mean, I feel that whatever your school, whatever you're from, I think generally if you put in effort, really whatever school you are, it doesn't really matter. You can be from NUS, SMU, NTU, UOL, whatever, right? Harvard. Okay, Harvard, I think different league, but whatever university you're from, I think as long as afterwards you put in effort, you, in other words, grind, right? And then I think you'll be okay. You do all right, and if you want more, then you put in more effort. Okay, but I personally don't wake up at 4 a.m. and go gym. You know, I'm a person who, my engine will start at night, all right, when it's quiet. I mean, right now it's 12 a.m. in Singapore, and yeah, so I think usually my engine will start at 1 a.m. and then I'll start to, okay, it's time to, you know, put in some leg work, you know, some work. Yeah, so it's yeah. Okay, Duke Leroy sent this couple of weeks back, $40. So, okay, this photo I remember, Duke Leroy, I remember. I'm afraid to say that. I mean, I mean that was the line that we drew together, right? This is the line. Let's see together. This is a what chart? 4-hour chart. So let's do exactly as 4-hour chart, and you guys can see, right? Hey, yeah, awesome. So that was the case. So there was this bounce up and bounce up. I mean, it's very much still possible because it's still at $40, so it's fine. All right, man, Gerard, thank you. Welcome to the channel. If I mean, do. I mean, if you like it, do subscribe to the channel. I gotta go work. Peace out. I've been lurking around, but never attended the live streams. Keep doing what you do. Thank you, man. Thank you. All the best to you too, man. Anyway, I mean, maybe I show to everyone. If not, people don't know what is going on, right? Yep. So Duke Leroy sent to me this couple of weeks back, couple of weeks, right? Yeah. So it, you know, bounced to $20, drop to $5 over around this area, fly up to $75, drop to $30, and now we're at $40. I mean, obviously we went up to I think 50, right, a couple of days back. So then we dropped to $40, and I mean the plan was from $40 we go up lah, right? That was the, I mean, at that point of time, I mean, it very much possible lah, bro. It's very much possible. If AMC hits 500k, let's make Singaporean. Bro, if I don't know, man. I don't know. If AMC hits 500k, I think there will be a lot of billionaires, and I think being a billionaire, man, that would be, yeah. So I don't know. I think, bro, if it hits $500, those who bought $5, they'll make 1,000, 10,000% gains, is it? Yeah, I mean, $5 to $10, 100% gain. $5 to $50 is 1,000% gain. Yeah, correct, right? And $5 to $500, that'll be 10,000 lah. Correct, right? Yeah. Pardon me, man. 12 a.m. 12 a.m. Okay, man. Anyway, guys, I think I'll keep this live going on. But I'll take my leave. But definitely I'll be looking around. So I'll type in the chat box. But I think I make a move for a while, right? But the live is still on. Not to worry. The live is very much still on. Okay, so not to worry, but mainly we take a look at stocks lah, right? Yeah, pardon me, I think perhaps need to do some work. If not, tomorrow's lesson is gonna be bad. Okay, so so yeah, just be around, just talk to one another. Oh wait, before I go, I mean the live is still on, just so you know. Before I go, oh, it's 12. I mean, I wanna know what is the COVID-19. I mean numbers, right? Okay, so. Has the numbers been out? Okay, guys. Never mind. There's no update. Doesn't matter. Yeah, I'll be around. Anyway, guys, I'm still around. My mic is still here, but I think I'll let my camera rest for a while. Okay.
a wrecking ball, and I prayed for my downfall, and I found a way to reconcile, cause in my heart it's not worthwhile. It's a bloody battlefield where some go down, others heal. In the end it's all the same. All you can do is play the game. Oh, do we say goodbye? Refuse to question why. I'm sad to say I'm sorry, so lie. Pretend that you're okay. Swear that you will stay. Keep trying for one day. I'm sick of all these lies. Don't care if I capsize. There's nothing left for me to hide. Don't wanna live a lie. Too many lows, too many highs. Too many things to criticize. And so I leave it all behind. Don't wanna live a lie. Life kept spitting at my feet and forced me down the dead end street. When all I had went up in flames, burning all the dark remains. Cutting up every part of my skin. Sunlight, passion within. I know what I want to do. All I can do is take the shame. Do we say goodbye? Refuse to question why. I'm too sad to say I'm sorry, so lie. I pretend that you're okay. Swear that you will stay. Keep trying for one day. I'm sick of all these lies. Don't care if I capsize. There's nothing left for me to hide. Don't wanna live a lie. Too many lows, too many highs. Too many things to criticize. So I leave it all behind. Don't wanna live a lie. I'm sick of all these lies. Don't care if I capsize. Oh no. I've been a million places, and never see a many faces, but I feel supernatural. Cause the spark is electric. For every part of me I feel it. I know it all comes back
million, a couple million now. I'm causing a commotion. I've been coasting, hear my name around the world like an explosion.
Rise up, rise up. We are the apocalypse, and a pill that keeps us floating. As we fly above the stars, the hype won't scare us falling. So rise up. We're too great to be landed. Rise up. We're too great to be standing.
Stoppers, fly around like choppers. Better cut those risks, one of my fists, we fire starters. One out of a million more reach, so always there feeling that I won't deny that work. Never be tossed, look at my eyes, I'm on the rock rise.
I'm running away, leaving my place, so I can't escape to swim in the waves, take my own shape. I've counted the days and slept in the rain to eager my brain now for seeing change, silence the pain. She said, why you gotta go, why you gotta leave me now? I say, you know I gotta go, I don't mean to let you down, no, but it's time to say goodbye. Without you in my life's gonna take some getting used to. Can't change my mind, I've lost all the words, but I never meant to use you to say goodbye. Without you in my life's gonna take some getting used to. Save my life. You can't be replaced, but can be erased. You just leave a stain inside of my brain. I'm not gonna break. You're too stuck in your ways and never could change. Must feel some restraint to give it away. I still hear you say, so why you gotta go, why you gotta leave me now? I say, you know I gotta go, I don't mean to let you down, but it's time to say goodbye. Without you in my life's gonna take some getting used to. Can't change my mind, I've lost all the words, but I never meant to use you to say goodbye. Without you in my life's gonna take some getting used to. Save my life.
I could wait 1,000 days. You never wait for me, you never wait for me. Even when I ran away, you're all that I could see, you're all that I could see. When I could hardly walk on my own, I had to lift myself out of the trench below. Haven't I suffered enough to let you go? Let you go, let you go now. You love me right for a minute, even though I tried so hard to forget it. All you do is pave the way so I could reinvent myself. You love me right for a minute, even though I tried so hard to forget it. All you do is pave the way so I could reinvent myself. You can watch me glow. I could wait 1,000 days. You never wait for me, you never wait for me. Even when I ran away, you're all that I could see, you're all that I could see. When I could hardly walk on my own, I had to lift myself out of the trench below. Haven't I suffered enough to let you go? Let you go, let you go now. You love me right for a minute, even though I tried so hard to forget it. All you do is pave the way so I could reinvent myself. You love me right for a minute, even though I tried so hard to forget it. All you do is pave the way so I could reinvent myself. You can watch me glow.